Hello everyone, good morning, good afternoon, good evening, whatever it is, right? We're going to be doing a little bit of a post-market analysis of the entire week with the 5 steps. And we're going to do it only on EURUSD first. We'll later check if we'll see how much time we take basically to, that's hold. We'll see how much time we take to do the EURUSD one, and if it doesn't take too much, then we'll simply go ahead and do the Aussie as well, which are the 2 pairs that I'm currently comfortable trading on challenge accounts, funded accounts, or just simply any account, right? And of course, we're going to do that only on New York, right? I don't want to go through London because that is definitely going to take a lot of time. And I'm simply not very interested in London, as I know that I won't trade it consistently because I simply can't wake up for that. So it's just, for me personally, it's a waste of time, but I will be backtesting London alone at some point, just so you get an idea if there's much of a difference. However, I do have that EURUSD 40R trade in a month, 40R month, right? On EURUSD on both the sessions, and in that you can kind of see how the results vary. However, as I've said multiple times to many people, it doesn't really change that much. The 5 steps really do just work whenever they tend to happen, and even some cases outside of Killzones, but I don't recommend doing that, right? The backtesting results that I've gotten are by going for the 5 steps within the Killzones, right? And not further than that. So I do believe that it's definitely worth keeping that in mind as well. So this kind of video, right, as I've been saying in the past few videos, this kind of video of backtesting and hindsight backtesting or analyzing pairs can help you learn a lot, right? Because you're seeing how the market reacted when this or that happened. And in this way, I actually was able to develop these steps, right? So just an FYI, right? And also, of course, as you probably already know, I am going to start a private community in a few weeks. So if you want to join, which will have multiple videos like this and many others, you can do that by just checking the description. I have all the information that you need about it there. And let's simply just jump onto it, right? So tiny round liquidity, bit minimum, but well, what we've got, a fair value gap. And here's the thing, first of all, right? Let's begin with a little bit of a talking. When we have a fair value gap like this, which is a 50-minute fair value gap, keep in mind that when we have a 50-minute fair value gap that is a step 3, such as this one, what I hate about 50-minute fair value gaps is that they are pretty large. Because keep in mind that at that point, we're just going to the 1-minute time frame already. And that means that this tiny bit of a move could have been an entry, this tiny bit of a move could have been an entry, and even this week here could have been another entry that price could have given us. So when I was looking at this, as soon as we started this bit of backtest and replaying, I didn't remember taking advantage of this, which I felt like maybe I had missed out on this completely. But now that I remember, 2 things, right? First of all, that what I just mentioned, and second of all, the 1 minute doesn't give us an entry as far as I remember, but we'll say that in a second. However, if I go to the 5, we have somewhat the same problem. We do have the wrong liquidity, the good market shift, and that gives us this, which could have been, again, losses. And basically just this one, right? Because that one was mitigated already. Which, as you can see, it's mitigated here, which maybe gives a loss. And then another one here, which maybe gives another loss. And then finally gets a bit lower to then react higher. So do we have the 5 steps here? I mean, we have step 1, 2, and 3. We'll see if we have the lower time frames in just a second. Just let me see if there's something else. Through London, even though we're not doing that, wrong liquidity, market shift, fair value gap, potential entries that could have even been held through that, which I find unlikely, but well, just definitely worth mentioning. So based on the current price action that we can clearly see on the 50-minute, that's the only fair value gap that we need to pay attention to. And we do have run of buy-side liquidity to the left. Market shift to the right. A fair value gap and theoretical interest in there. I don't really remember much about this. I don't think I participated in that, but we do have a tiny round liquidity here with an okay market shift and a fair value gap. Actually, this market shift is better than that one, so it does happen. Fair value gap, press trace back into it. We'll see what we can get out of it. We do have news at 8, maybe. Oh. So we'll draw that fair value gap and the higher one as well, just to keep it in mind. You know, we'll see how the market develops. First mitigation on this fair value gap, as soon as the Killzone begins, we have nothing, right? Because the market shift below this low, no fair value gap to sell, so nothing for us to do. Continues going higher, it takes price liquidity, aggressive move lower, market shift, fair value gap, and that means that we do have an entry right there that could have been executed like that. However, I don't know how I would have tried to execute this, so everything that we'll talk about this, about everything that we'll see here, basically, is something to take with a grain of salt, right? Because I'm just talking what the 5 steps did, not what I did, right? You know what I did because I talked about it the week through videos and also through Telegram, right? You know exactly what my results were through this week. So we're here just to talk about the 5 steps. 5-minute fair value gap, and there's a problem with this. First of all, profitable trade. Do we get the 2R? We definitely do. However, it does reach down to 1.7, which means that it retraces back to break even, and maybe we would have been taken out, which does make sense. And personally, I think if I would have taken this, that would have been a break even for me. I didn't. At least I don't remember participating in this, to be honest. I think I didn't. No, I didn't. But well, I can't say for sure. Doesn't matter. Thing is that for me, would have been a break even with the 5 steps. It's definitely a win. So fair value gap, first mitigation, second mitigation, market shift, potential loss here. So we could say that we have a -1R already. Let's do that. Monday, -1R. Aggressive move higher, better market shift, better fair value gap, a little bit of a better entry we get. The stop loss, yeah, stop loss would have been a bit tricky because it's quite aggressive and probably targeting this equal lows. How much are we getting down there? 1.9, so definitely. And that makes it a break even, right? Because again, it reaches 1.64. Personally, would have been a break even already when that low is broken, probably. However, with the 5 steps, that could have definitely been a loss. Personally, with the rules that I currently have, I would have missed out on it. Would have missed out on the loss. So, remember that we're trading off this. It got lower. Oh, right, we didn't look for buys. No market shift on this move higher, which means that we can't take advantage of this theoretical buy. This breaks structure, of course. We do have a market shift, but no fair value gap unless we went to the 2-minute. And this market shift here doesn't create a fair value gap, and the one that was created here was mitigated before the market shift, so invalidates that. So basically we don't have anything, and if we would have had something in here as an example, we would have taken a loss. So that's great to see, and that's it for Monday. I lost at a break even. Personally would have been a break even. Oh, sorry, and theoretically a profit. Wait. Oh yeah, no, that's fine. Theoretically a profit. Personally would have taken the loss, likely. The break even as well. Right? I don't think I would have taken a loss on that. I'm gonna call it rules and a 2R on the 5 steps, right? Because again, I would have personally not taken that one. Not taken that one, sorry, but we definitely do take the trade. However, due to how it develops, I would have been taken out of break even for sure. Right? There's no way in hell that I'm keeping that trade open after price moving as much as it did in my direction. But I have seen that happening, in which price simply retraced to mitigate it for value gap or the block liquidity, whatever it is, to then simply continue going in the direction that it was. But in some cases, it does return and take you out for a loss, right? So I just prefer not participating in those markets. Okay, so now Tuesday, February 28th, and okay, 15-minute wise, we have the tiniest fair value gap that there can be. A okay market shift, whether it's from this high or this one is a bit better, right? Thing is that they happen at the same time, so it doesn't really make much of a difference in this case. And we have basically, let me actually zoom in a bit more. Also liquidity, little bit of a swing high, market shift above this high, or this one, whatever you consider is pretty much the same in this case, and a tiny fair value gap in the 15 minute. Bit complicated, but we do have the open based on power 3 right there. So it does trade higher first. However, it does trade back into discounted prices before going higher, which is definitely nice to see. Let's look what the 5 minute has for us. And now that I remember, I actually decided to avoid this price action. I didn't like it in any way because of the reason of, and the reason to that was because the wrong liquidity for me was bare minimum, right? As I just said, bare minimum. It's a little bit of a swing low, but well, it is a swing low. That's taken as liquidity. And then on the 5 minute, we also had this swing low being taken as liquidity, which I definitely didn't like. And I was not considering the 15 minute as far as I remember, right? Because again, probably saw the wrong liquidity, consider it not enough, and simply avoided it. And I do believe that I ended up avoiding on a pretty good trade right there. We'll talk about that when we get to it. After that, I'm never taking a sell like this one, although no, we don't have a market shift. Okay, then never mind. There's no sell. And that's it. Yeah, that's it. Okay, so let's look at that 50 minute fair value gap. And the entry was actually so good. So good. We get the market shift. And a bit of a low right there, which is also liquidity. The fair value gap. And the theoretical execution here, plus 2 ticks for spreads. And stop loss right here, minus 2 ticks, just for the sake of it, really. Because it's not necessary in this case. And 2.72R, right? Definitely 2R, right? I don't think I would have gone for the 2.5, 2.7. So we're going to call that 2R 5 steps, missed due to weak step 1, right? This is also when you write stuff like that, then you can come back and realize that, well, because of this reason, you ended up taking a loss, or because of this reason, you ended up missing out on a trade, or this trade happened like this and you didn't take it because you were unfamiliar with this type of setup, or this type of price action, or this structure of the trade, right? Multiple things that can happen in the middle, right? But yeah, that's pretty much it. That's a very good trade. I don't think we get the chance to do much else. Oh, actually, unless we were to take advantage of this, wrong liquidity, market shift, and a tiny fair value gap here. And I don't remember analyzing it. And again, if you want to know the results, you should look at the Telegram, because I don't remember. Oh, okay. So this is what happened. We get the market shift, right? Price aggressively drops, and I was waiting for it to trade back onto this line, right? It doesn't do that. It doesn't do that. It doesn't do that. Ranges a little bit, critical lows, takes the liquidity, market shifts. Sorry. What I said through Telegram and the video, although I don't think I uploaded this video, what I said through the Telegram was that due to those equal lows, I was not interested in seeing price taking those before my entry was triggered, right? So it takes that, retraces, and it's actually a pretty good execution, right? Because what is it actually doing? Taking sales of liquidity, looking for buy side liquidity, and the theoretical continuation lower, right? However, it took sell side, took buy side, took sell side again, continue going higher, right? So personally, would have not managed to get out of break even. I don't think it pulls away enough, unless it would have been executed in a better way than what I was thinking on. But basically, I ended up avoiding a loss because of that. However, the 5 steps would have made us take this loss. Personally, avoided it due to not liking the price action overall, right? It's just something that I didn't feel comfortable with taking anymore, and ended up avoiding a loss in a little bit of a weird and unconventional way. Let's move on to the Wednesday. Oh, here should be enough. Go to 15. Oh, 15 has nothing, but it's just impulses. It's all that it's doing before. I'm looking at this time, right? Of course, I know what's happening here and everything, but when we're looking at the Killzone here, the beginning of the Killzone, we know that there's no parabolic gap that we're actually going to be able to use, at least based on the 15. And based on the 5, nothing really. I do remember that I actually took a sell on Aussie dollar, which is the one that I shared with you on YouTube, which is great. Yeah, nothing for us to do. We could have gone to this, the market shift, and then go for this parabolic gap right here, which price trades up to there, and a bit messy price action, but as you can see, we do get the 5 steps in a pretty good manner, right above that, right on that swing high. on that fair value gap, sorry, and stop was +5, +4 actually, but I'm actually starting to use +5. No real reason, to be honest, but just an FYI. And it gets there with news, which means that we would have avoided it anyways, but or close to it whenever price was pretty well in our direction. But that's an entry with the 5 steps, although I definitely would have not taken it. So everything was complicated, to be honest. Plus news. So we'll leave it at that, and that's actually my stay note Tuesday. And okay, that's it for that day. Remember that I did take the Aussie sell, which was a pretty good one, and it was a bit clearer. It was still complicated in every way imaginable, but will happen with the 5 steps. Somewhat clear, and that's pretty much what we look for, you know. Liquidity, sorry, fair value gap not mitigated. Oh, I remember this one. Which actually Thursday returns to it. This fair value gap here, which is actually not mitigated, and Thursday actually does get back to it. However, there's this tiny thing now that I'm seeing it, and I do need to clarify this. Oh, actually, did I make the cut? Yeah, I did. So what I need to clarify is that in some cases, and I probably already know a bit with whether it is through on experience or my videos, after the market closes, the wicks and the price actions of the candles tend to change in one way or another. So I don't know if this mitigation didn't happen now that I'm seeing it, or if it did happen, and I did try to take advantage of a sell, because I do remember trying to take advantage of a sell, but we didn't have a step 5, which is somewhat clear due to the higher time frames, right? Where I simply pulled away. I was looking for an execution around the market shift line, which is great, but sadly it doesn't get up there, and I just got to Aussie $. And it's a bit of a shame, right? Because the direction was definitely on point. But well, we don't get the trigger. And after that, price will change its direction a bit. We could have tried to look for buys in here, but price doesn't mitigate that before the market, before the Killzone ends, simply. And nothing for us to truly do in this case. Also 15-minute tiny run buys of liquidity, market shift, 2 fair value gaps, and neither of them mitigated. So yeah, nothing for us to do in this Thursday. No. Oh yeah, Thursday. I guess I was thinking, oh, maybe it was mitigated. We'll keep that just in case, you know, because again, it was mitigated throughout the next Killzone, unless maybe I'm thinking on another day, or Aussie dollar maybe even. I guess we'll find out now. It happened through the, yeah, okay, it was this Killzone. Happened through the London Killzone. However, we would have not been able to participate on it. Oh, but I did remember London was actually interesting this day, because we're mitigating that for value gap back there, right? I'm actually cut this. We were actually this was an interesting session, right, through London, because first creates equal highs, takes those equal highs, mitigates that fair value gap that we were discussing a second ago, which means that even at that point we could have been looking for a sell if we trusted this, right, which I don't, and I personally would have not. But then we have equal highs being taken as liquidity, right? Aggressive move lower, market shift, fair value gap, lower time frame confluences to sell, right? I believe that there is a step 4 without a step 5, but again, we're not analyzing the New York Killzone, the London Killzone. That's actually a really interesting thing to wake up and just see it, you know? Friday, the sell that we got here, participated on it, sadly got out with a break even, or not. Or did it happen through Aussie? No, it happened through this one. Aussie actually got a much better result. But well, it is what it is, you know. Later at the end of the Killzone, that happened. It took buys of liquidity, lots of it. Market shift here, for value gap there. We'll see it. Tiny liquidity, for value gap there, but it's not mitigated, is it? No. Okay. So let's see the buy, sorry, the sell. And then we're gonna look at the other sell. Good market shift, good for value gap. Sadly, my execution was a bit too low, because if it would have been on the market shift line as I was waiting for at first, look at that. It's actually exactly to the tick. plus 4. We do get the 1 hour that I was actually looking for this day, and even 1.5 hour without much of an issue. And the reason why I was looking for just 1 hour is because on Fridays I tend to be more conservative whenever I've had either a bad week, a good week, and the only days where I tend to risk it a bit more and go for a trade like this, for maybe even looking the 2 hour, is when I've had a week that not much happened, right? A flat week on which not many setups showed up. But as an example, if I had a bad week because of the fact that I missed out on opportunities, then I'm going to avoid a day like this, because it's Friday, we're going to try to force an opportunity because it's the last day of the week, and then we'll have to wait till Monday to try to find another opportunity, you know? So a lot of FOMO kicks in, which is not what we want to see, right? So this trade, personally, taking it like this, should have been closed at 1.5 hour, but I took it differently and ended up in a break even. There's nothing that I can do, really. So a break even with rules. Personally, don't think that I would have played it differently unless, again, it would have been executed differently. This was actually a pretty good trade, and I did take a paper trading on it, didn't I? Keep in mind that I take anything on paper trading, so it doesn't really mean much, but just to show you that I was analyzing it, right? Execution there, and bought up here, well, down here, basically. And it was actually a pretty good sell, right? Because again, we have the step 3, the stop loss 77 is fine. If we're looking for just 2 hour or just 1 hour that we were looking initially, we definitely get there, right? Without much of an issue. We get the 2 hour, any peaks at 353, right? Very high, 352, 350, yeah, 352. Personally would have gone for 1 hour, but it was with the news, so definitely difficult to take. And that was a plus 2 hour with the 5 steps. Missed due to out of market, and yes, so it would have been avoided either way, right? Because of the news, because we're executing 3 minutes before news, and we never know what could happen with those. But yeah, that's pretty much it. Not a very strong week, not a very bad week either, because if we're talking about the 5 steps specifically, we're seeing a... You can't actually see the calculator. We're seeing actually a plus 2 hour, minus 1 hour, minus 1 hour, plus 2 hour, plus 2 hour, plus 2 hour. Minus that 6 hour, just in one trade. And keep in mind that we're going for just 2 hour, because in some cases, I just go for 2 hour and we get to 3 hour, right? There was actually a student from the community, from the first prior community, that was looking at how many of their trades were actually getting to the 3R, and it was around, I think it was above 80%, which makes it statistically enough to consider it worth it, right? Because if you just allow it to run to a 3R, you're going to be getting an extra R 80% of the times, right? So that break even that you're getting theoretically, because you didn't close at 2R, you will recover from those wins, right? From those theoretical wins at the 3R. But yeah, I just feel comfortable with the 2R, and with the win rate that we currently have, it's more than enough, to be honest. So, I mean, and again, we're talking about just 1 pair, 1 week, and 1 session, right? So if you were to trade both sessions, the results will be either better or worse, right? Because keep in mind that you could be taking twice the losses, yes, twice the wins theoretically, or maybe London is going to have a bad week and London is going to have a bad week and New York won't, and you will take all the losses in London and all the wins in New York, right? That's the beauty of the market, on which you need to pick something and find out if it works, just like this. And if it works, then just work towards making it even better if you can, or simply perfect it as much as you can with your own psychology, right? That's pretty much it. So that's all for this week. 6R, 1 pair, 1 week, 1 session, not 1 session, only 1 Killzone being utilized. Yeah, I think that's good enough. So I hope you enjoyed this video. If it was worth it, it might be worth for you checking out the prior community too. That will start soon. So if you're interested in that, there are a few spots left with the current price, as the prices are going up in a few days. So just make sure to save yours.